Gold prices sturdy at one-month highs on negative real rates, record one-day COVID cases worldwide. Gold prices fell $10 per ounce from a new one-month high Monday in London, easing back as inflation expectations continues to outpace the rate of interest offered by Western government debt, and world stock markets look torn between record stimulus and growing fears of a second wave of coronavirus infections worldwide, writes Atsuko Whitehouse at BullionVault. Geopolitical uncertainty also increased after China's dictatorship in Beijing released details of the national security law it plans to impose on the formerly autonomous region of Hong Kong. Dollar prices for gold bullion settled in London jumped to $1,758 per ounce in Asian trade overnight, the highest since the 18th of May. The dollar itself, as measured on the U.S. currency's index of value versus its major peers, meantime retreated following 4 consecutive days of gains. A major part of the move higher in gold over the past 2 trading days has been U.S. real yields heading increasingly negative, reckons John Reed, chief market strategist at the Mining Industries World Gold Council, pointing to the inflation-adjusted rate of interest offered to new buyers of 10-year Treasury bonds. The real rate of interest offered by both 10-year and 5-year U.S. bonds has now fallen by almost 1% from this time last year, according to data from Bloomberg, costing today's buyers 0.64% and 0.77% per annum after inflation respectively. The relationship between gold and real rates remains strongly negatively correlated, says Reed. The World Health Organization meantime reported the largest single-day increase in coronavirus cases to date on Sunday, reporting more than 183,000 new cases around the globe over the prior 24 hours. Brazil accounted for 54,771 of that daily total, followed by the US with 36,617 and India with more than 15,400. With investment inflows to gold-backed ETF products since New Year already exceeding any prior calendar year, hedge funds and other leveraged speculators in COMEX gold futures and options also raised their bullish betting on gold as a group in the last week. After cutting their total number of bullish bets for 3 weeks in a row to 55% below February's peak, the so-called managed money category also cut their bearish betting over the 7 days ending last Tuesday after raising it for 6 weeks running, according to the weekly data published by U.S. regulator the Commodities Futures Trading Commission (CFTC). Overall, that pushed the net long position of managed money traders to the highest in 3 weeks, recovering from the smallest in 12 months. The speculative money also raised net bullish bettings on silver prices to a 3-week high, the CFTC data show. Our view is that the weight of monetary supply expansion is going to ultimately be debasing to the dollar, reckons Lisa Shallett, Chief Investment Officer for Wealth Management at U.S. finance group Morgan Stanley. The Fed commitments to low rates and QE bond buying are anchoring real rates, to make the case for gold pretty sturdy. 9 private banks running some $9 trillion of client assets have advised raising allocations to gold, and Morgan Stanley added a 5% position to commodities including gold in all its models at the end of March. Competitor group Goldman Sachs on Friday raised its 3, 6 and 12-month gold price estimates by around $200 each to $1,800, $1,900 and $2,000 per ounce. Policy uncertainty aside, we believe that debasement fears remain the key driver of gold prices in a post-crisis environment such as this, analysts at Goldman Sachs wrote in a note. Gold prices for European investors meantime dipped 0.3% to €1,560 per ounce on Monday after also jumping to one-month highs as Eurozone bond prices rose, pushing yields further below zero, reportedly on hopes that the appointment of a new court president and judge at Germany's Constitutional Court in Karlsruhe could reduce its Eurosceptic majority, leading to less confrontation with the 19-nation European Central Bank over its QE bond buying policies. UK gold prices edged lower by 0.1% to £1,411 per ounce after also hitting one-month highs as new Bank of England Governor Andrew Bailey said on Monday that the central bank should start to reverse its quantitative easing asset purchases before raising interest rates, upending the BOE's long-standing position. As for other precious metals, silver rose 1.36% to $17.87 per ounce, pushing the gold-silver ratio of the two formerly monetary metals' relative prices just below 98, the lowest in 1 week. Platinum prices also gained 0.83% to $821 per ounce.